Hello, everyone. Welcome to another episode of the DQ Cast. You have yourself with Robert Ridzak, the host of the show, along with his two compatriots, the sophisticated, the well-hydrated Matthew Reed and Carlos Zendejas. How you gentlemen doing? What you drinking today?
I'm on the Polish beer again, Żywiec.
Guys, I gotta make a little. I deviated from course here.
Is that the Rabbit? What is it?
I've got a local brewery. It's Two Roads Brewery. It's called Toucan Easy Ale.
Nice.
I stole it from my father-in-law.
Nice. How is it? 1 out of 10. I haven't heard of it before.
I mean, it's beer, so it's good. But
so it's the 10.
We'll call it a solid 6.5. Nothing to write home about. It's no Patriot water, but we'll take it.
Got it. Stick with what you love. You guys only drink beer. I've never seen you guys with any other beverage. No, I've only seen Carlos with his eggnog at Christmas.
No, I did a whiskey the day that you were gone.
Oh, you did?
Yeah,
he did.
Missed it.
I missed it. That was an exceptionally tough week, so I think we gotta stick with the happy hour beers.
Nice. I'm sticking with a carbonated beverage. I have my Spindrift. It's spiked. It's a little spiked apple cider.
Does that mean that dad's gonna be in bed by 6:30, 7 o'clock tonight? We're gonna wrap the show and you're gonna be passed out on the couch.
God willing. My wife said, "Oh my God, you're getting such dark circles under your eyes." I'm like, "Yeah, thanks. It's only taken me like 2 months."
That'll happen.
Nothing a good spiked Spindrift can't fix though.
Boom.
Yeah. Well, guys, I mean, I know we've had busier weeks in the news on the news front, so I know not a whole lot to talk about on the macro side. I know the Fed came out calling for a 25 basis point hike. That I feel like that was pretty much largely expected, right? I mean, they're still hiking, but I think the question, at least from what I've seen out in the market, really the question is, will they go higher than 5%?
We talked about that last week. It's on the dots that they will. It's actually first confirmation of that. I think it was Harker that said 25 bips, is the right number for the next hike. So that's good to hear. But yeah, everyone else is still hawkish. We've had them all speaking this week, all hawkish. So
it's funny to me. It's funny to me though, because I feel like the market on the whole is basically being like, cool. I'm calling your bluff, bro.
I just have this mental image of two cars racing towards each other. It's like a game of chicken.
Yeah. It's shocking to me how little credibility the Fed has right now. And I think more than anything, probably the best argument as to why they're going to stick higher for longer is that the Fed is just this petulant, weak man sitting around being like, "I promise I will do this. Don't push me to the edge.
Where are my dentures?"
Yes. So, I think 25 basis points is pretty much a lock at this point. Although there is some speculation, so that the CPI is going to convert to being a 2-year rolling average to a 1-year rolling average, which will sort of change the number. And
when does that happen?
It happens, I think, next CPI print or something like that.
So that should, that would.
That's going to bring down. It's going to bring down inflation dramatically.
Because you get rid of 2021.
Yeah. So
when the numbers don't show what you like, you can you just modify the
exactly. It's the standard. It's the standard management practice. Why be accurate when you can shift the goalposts? I'm not saying it will happen. I tend to be in the camp that they're gonna have rates up higher for longer, but I think it is a very real possibility that they'll use a shift in the metrics as justification to sort of save some face if they get pushed by the bond market to do anything. So,
we'll on that, there has been the only real thing of note this week in terms of prints was like the retail sales, and that actually globally has been lower across pretty much every state that's published, every country that published this week, so at least the UK and US, and that's slightly concerning. Like, that's never ideal when your retail sales start to decline. So it'll be interesting to keep an eye on that as it goes. Like, maybe they've done too hard as it is.
But like it's kind of funny because it's like what they wanted, right?
Well,
they
it's what they want.
Inflict pain on consumers, and they're doing it. It seems like so.
There was some. I was looking at some figures there from one of the buy-side shops, and they had a graph showing consumer expectations for inflation versus institutional expectations for inflation, and there's been this like growing divergence between the two. Like, the broader consumer market within the U.S. has become intensely aware of rising inflation, maybe even more so than what's actually happening. Like, they might be a little bit late to the game. So when you mentioned the consumer numbers, retail, I was like, man, that's interesting. It might already be bleeding its way in. So maybe maybe institutions are too smart to, but I don't think the broader market that maybe not as plugged into the markets. They might be still. They might believe what's going on when Powell's saber
I think
rattling.
you got a lot of people are definitely worried about job cuts as well. That's like I've seen a lot of, or know a lot of friends that are going through that currently. So it's not a pleasant start to the year.
I think there's some interesting research that I think has come out about how in some ways that's almost like the tail wagging the dog. Because when consumers become more aware of inflation, they reject price increases by changing their behaviors, and then that in turn sends a message to producers that you can't just sort of like raise prices and have it be sticky. So in some ways, that actually might be a good thing to bring inflation down. But we'll continue to see how consumers react.
Yeah, I guess. Consumers that have a little more price discretion. There is Davos happening right now.
Not everybody can be Matthew Reed.
Yeah,
drink all those fancy Polish beers.
I'll keep the economy going. I'll do what I can. Yeah.
Those things are huge too, isn't it? Like a half a liter bottle.
What's that thing that you guys have in the US where you strap something to your wrist, hands or something? Like 40 beers or something.
Edward 40 hands.
Yeah, they're like that size, I guess. Never done it, but one day, Carlos, you can.
There you go. That'll be our next Deep Q board meeting. Before we go over financials, we have to play Edward 40 hands.
That's hilarious, you guys. Yeah, there was obviously Davos, right? Was out there. All the bigwigs are out there too. I think he had the vice president, the president was out there kind of talking a little bit. Jamie Dimon, all the other folks out there too. I didn't hear anything super noteworthy out of there.
It just means you're not listening to the right media channels.
Yeah, I guess so.
If you were down on the conspiracy theory podcasts and blogs like I am, then you'd know that Klaus Schwab is planning on taking over the world and making us all eat fucking crickets.
Have you had it before? I have it. I had. With enough oil and salt, it's palatable.
They used to have those economist trucks that would go outside at Deutsche Bank on 60 Wall, and they'd have like a waffles and dingus cart, and you could get. They'd give you a free waffle, but you had to get it with mealworms on it.
God, should you paid not to?
Hey, listen, man. I was an associate fresh out of grad school at the time, so some of the
giving you free anything.
It's like free protein.
Yeah, free dog. Chip it in.
So funny. That's so funny. Like, but Carl, you mentioned that Jamie had some interesting comments on Bitcoin when he's out there. I don't know if that was in your conspiracy Twitter feed or is that in mainstream.
No, it was definitely fun on crypto Twitter though, because Jamie Dimon had said that he was doubtful that the total number of Bitcoin would remain at 21 million, to which crypto Twitter collectively lost their shit and said, "Excuse me, sir, it's written in the goddamn code
is law."
So it was a funny interchange. Have you seen that meme where it's got like a bell curve, and on one end is like some idiot who says something, and then in the middle is like someone who's very frustrated, and then on the other end is the really smart guy who says something, the exact same thing as the idiot, but he like gets it, so it's cool. I think the 21 million questioning of Bitcoin supply is either the dumbest fucking comment in the world because it shows you don't understand the foundations of Bitcoin, or it could actually be kind of a nuanced and a smart thing to do because there is some speculation that once Bitcoin reached its terminal $21 million issuance, like how do miners make money?
Yeah.
Right. As it currently stands, there's not a lot of utility or in terms of like everyday usage of Bitcoin. The primary use case of people using Bitcoin is to buy it, put it in cold storage, and hodl it. Yep. And so if miners don't have the ability to make money by earning their block rewards, then it's not like they're getting a lot of like transaction fees associated with those at the moment. So just because it's written in code now does not mean that a very powerful constituency of devs and miners could just say, listen, I know this is written in the code, but we're going to fork a code change because we need a way to make money because all you are just sitting on your Bitcoin and not doing anything with it. So it's kind of an interesting sort of like lesson in tokenomics. Now, I kind of favor the side that maybe Jamie Dimon just doesn't know what he's talking about when it comes to Bitcoin, but I guess you could make a nuanced argument that he did, and we'll see.
Give benefit of the doubt. It's benefit of the doubt. Yeah, there was also a crypto rally, wasn't there? Just regarding the overall news, it seems like we've had a little bit of spike in crypto prices across the board. I mean, even the altcoins were kind of rallying hard on the back of Bitcoin and Ethereum.
We've been thinking a bit about that. We've been seeing a lot of that flow is definitely driven out of overnight hours, like APAC. I'm trying to get our heads around what is actually driving it. So today we saw a pretty big rally in Bitcoin as well, but that was in US hours. But yeah, there's probably a lot of conversion of US dollar tether that's happening on those exchanges. It's like people took all that out and now they're just putting it back in, doing the same thing again.
Yeah, I'm of two minds about this rally. So I think you can kind of maybe break it up into three camps. The first could be that, we have people that are looking at the macroeconomic outlook and saying, hey, I'm pricing in maybe a Fed pivot. And I generally, like the idea of, these risk assets going up when the Fed, cuts rates. And so they're getting ahead of it. They're calling the Fed's bluff. Mm-hmm. I'm not super sold on that, to be honest. Mm-hmm. And then the other two scenarios are really sort of intrinsic to crypto. One could just be that, listen, we had a scenario where market participants were effectively defrauding people, and they were taking Bitcoin and Ethereum specifically, and selling them and then swapping them into their own, VC-backed tokens to drive the price up. And now that action's gone, we're actually seeing a bit of a reversion of flow back to those bellwether crypto assets, which, I tend to believe. I actually do think that we hit rock bottom at somewhere around 1,200 for Ethereum and 16,000 for, Bitcoin. And so now, the market kind of has nowhere to go but up, right? You can't borrow Bitcoin to go short right now because all the lenders have gone under.
Yeah.
So really, it's just it either stays at its bottom or it goes up, and I think it's just kind of going up because people are breaking out of their crypto winter parkas and deciding to go put a little money to work.
It could also be this is not just for crypto, but broader financial assets. This January effect where people might be selling at a loss to capture some. I don't know what how the tax treatments are for our colleagues and friends out in Asia, but that might be something too that might be driving them.
And there's also there's also something which, I'm always a little dubious of after hours moves that happen in crypto during low liquidity. I mean, could just be plain old fashioned market manipulation, as our friend Jim Cramer would like to have suggested. But I'm not super bullish on that one either. I think it's probably more a function of just the market doesn't have a whole lot of downside in it at the moment. It can either kind of stay at the lows or it can go up, and it's choosing to go up.
Yeah, and you touched on just the lack of the inability to borrow now, just having all the leverage flushed out. Obviously, Genesis filed for bankruptcy just a couple of days ago, and it's been really hard to find assets to even borrow now. It's crazy how the gaping hole that we've seen in the lending space.
Who's actually left from that pack? So we got Celsius are left, right? Or is it Circle? I forget.
Celsius is down.
So who's left?
All the
no
big.
One. It's really that's really it. There's
is
no
Nexo left
right
as
now.
well? I haven't checked them for a while because I know
they're
they got
still
fined
alive and
recently.
kicking, and they also had their offices raided in Europe, and they willingly left the U.S. on their own accord to likely avoid getting indicted. So you've got Genesis is down, Nexo's down, BlockFi is down, Celsius is down. Apologies if I forgot anyone notable, but in my book, that's kind of like the notable things. Like those were the CeFi lenders where you could go and you could borrow assets to short. And to be honest, Genesis was hands down the biggest one.
Yeah.
So, if you're a hedge fund that's trying to borrow assets to go short right now, good fucking luck finding anything meaningful.
Yeah, so I was thinking about this too. I mean, I think it's very different when you're a financial firm like these lenders were, because reputation is so important. Filing for bankruptcy doesn't mean that the firm is necessarily being liquidated, right? I don't know how far along BlockFi. I haven't been well updated on that, but just. I mean, these things, they're going through a recapitalization, so maybe some of them still stick around. I mean, that's still possible. I know they're laying off staff, and they're definitely got whacked in the head really hard.
There's rumors that FTX will make a comeback as well, right? Did you read some of that? So what you're saying is totally accurate. Just because you filed doesn't mean you're...
Did you see that the owners of Three Arrows Capital came back this week, and they're trying to raise $25 million to start a firm called GTX because it comes after FTX, and they wanted to buy claims from FTX creditors and go after everything. There's actually a super funny thread because
are they being successful up there?
I pray to God they are not, but who knows?
Are you all familiar with the name John Merriweather?
Yes.
Founder of Long-Term Capital Management.
Yeah.
That man has successfully raised 3 hedge. I mean, you get your core followers, and something you can
keep going no matter what happens.
It's weird though, because at least in TradFi anyway, if you blow up spectacular, if you've got a 9-figure blow up, everyone's like, people don't say to themselves, "Oh shit, you lost $1 billion of investor capital." They say to themselves, "Wow, you must be really good to have raised $1 billion and then lost it all."
Yeah.
John Merriweather was able to do this fucking 3 times. Although the maybe one distinction I will make is that John Merriweather, at least as far as we know, was just a PhD that was over-reliant on the normal distribution of returns versus somebody who willfully defrauded investors.
Yeah.
But that's why I was like, yeah. Completely.
Which is why we have model risk now.
Yeah. So I don't know. It's an interesting world that we live in. But I did see something very funny, which was a tweet that Alex Gurko sent out. He's the owner of XTX, which is one of the biggest TradFi market makers. And someone after the Three Arrows guys put out GTX, put out a funny meme that was like a porn star saying that she was going to start a new crypto exchange called XTX. Kirko retweeted it.
No.
And said, "Legal team, I think we may have a problem."
That's great.
Oh my God, that's hilarious. That's hilarious. Yeah,
all in good fun.
So yeah, what else is going on? I mean, I know, like I mentioned, Jennifer. I know with the Genesis bankruptcy, I've always been kind of keeping a side eye on GBTC and all of the discounts. Obviously, following very closely since all of those, since Genesis and Three Arrows are so intertwined into the discount that's been showing up in that the Grayscale Trust for Bitcoin. It bounced. I mean, I think it was at a low of around 60%. I want to say something close to that. If it's not exact, and then it rallied hard on the back of some of those flows I think that we saw from Asia. It was around that same time period. That discount tightened up a bit, and I thought maybe that had something to do with Genesis, because I know they were on the brink of bankruptcy. Maybe there was some information that was swirling around, but with the filing, I was like, oh wow, but then I didn't see a real big. I mean, maybe it's widened a little bit, but there really hasn't been a big shift in the discount for that. Which it's an interesting observation. They might explain that a lot of this bad news is already priced into that, and they've already. So, see how that goes.
Yeah, I think that the market's just kind of digested all of that, and we had talked about this before. The whole bankruptcy of Genesis was pretty much priced in. It was almost a foregone conclusion that it was going to happen. Like who was going to give them, $3.5 billion to shore up, an excess of liabilities. I think if you look at what they've got on their plate right now, they owe $3.5 billion in liabilities in excess of their current assets. Like, who are they going to find to cut a check for that? There's also a looming threat that the estate of FTX is going to claw back the $2.5 billion that Alameda and FTX paid back to them under the premise that they knew that those funds had been obtained fraudulently and that FTX was insolvent, and they were trying to get their money out first in a backroom deal. So that's a very real possibility as well, because that will then expand the hole to $6 billion. And then if you believe anything that Cameron Winklevoss says, after Three Arrows went down, they tried to pass off a long-term 10-year callable note as a current asset in their financial statements, and use that as a fraudulent basis to say that they were liquid to cover all. Basically, they had collateral to cover all debt obligations, and that is what the Winklevi claim prevented them from pulling capital immediately from Genesis. So you've got possible legal recourse there as well. It's going to be messy. It's technically a Chapter 11 bankruptcy, which, like, a Chapter 7 is an insolvency and it's just pure liquidation. Chapter 11 is technically restructuring. But it seems to me that there's a lot of hurdles that they're going to have to overcome in order to come out of this alive. My guess is that they probably have some sort of structured settlement that they negotiate with all of their creditors, but I'd be very, very hard pressed to believe they have some sort of like white knight investor come in and save them at the last minute.
Yeah, I mean, and they also have the fine. Like they're also fined by the SEC, right? And it's just like the question is like, would they even if after the restructuring they still would have to? Would they even want to go out through the lending without any regulatory clarity, too? Right. So I feel like it's kind of like a lame duck almost.
Yeah. So it's not looking great for them, but at the same time, I think it's probably a net benefit for the market that Genesis no longer exists. I mean, it doesn't seem to me that they had very good risk management tools. Doesn't seem to me they really kind of knew what they were doing, and if they're gone, then kind of sucks in the near term. But it seems like the market's really priced it in, and we can just kind of move on.
Yeah. There's still a gap, right? I mean, there's this massive hole in the lending market within like the CFI lending market. And I mean, it's like obviously they're, right now people are, we're going through a downturn. People are very cautious about borrowing. There's still some regulatory uncertainty, but there's this huge. I mean, now there's this because everyone has so many firms have been wiped out. Like there could. I mean, as an entrepreneur, I'm sure there are many entrepreneurs out there that might be even licking their chops right now because there's this gaping hole now, and they can maybe start building over the next couple of years with better risk management controls to be able to provide a service to investors and borrowers.
So here's a question. So if they've been sued for securities offerings, which like the Earn program and various other ones, how is that going to look for lending on DeFi protocols like Aave, where you're going to get an interest rate for putting up collateral on there?
I think that those guys are going to get sued by the SEC.
Aave?
The developers at Aave, that's where I think it needs some clarity, right?
It's going to be, it's going to be the foundation that runs Aave. But it's a security, right? It's a lending product. And that doesn't necessarily mean it's a bad thing, right? Like saying something is security, I think, is often used as a pejorative term in crypto, and it's not. It's just saying that you have to be cognizant of if you offer these types of services in the U.S. or to U.S. persons across the globe, then there are steps that you need to do to make sure that these things aren't fraudulent and that they are above board with all the things that you need to do for security in terms of registering them, disclosing them, marketing them. So it's not a bad thing necessarily, but I just think that a lot of these DeFi protocols are going to end up having to find some way to exist in a regulatory environment.
Yeah, because like we said, it's hard to get a short position now from these kind of CFI institutions because none of them are there anymore. But then I'm like, well, you could technically borrow off DeFi, but then at some point, I wonder whether this is going to get challenged as well.
I think that the problem with buying off of DeFi, though,
the collateral
is that exactly. You've got to over collateralize them.
Yeah.
And I don't actually think that's a problem necessarily, but if you look at the number one use case for these sorts of things, right? It was you had Alameda getting just shit tons of leverage so that they could, short something or effectively move the market, right? They were behaving like a chip count leader at the poker table. So, when you get that large, you can push the market around, and they learned that, they got a large enough position, they could just push the market around. So if you have to 100% collateralize things, and you're kind of limited with the capital you have on the table, and I guess you tell me what is the actual market for, borrowing Bitcoin if you're not borrowing Bitcoin for the purpose of trading and getting leverage?
That's the only one I can think of at this moment.
So you have a massive tax bill, and I don't want to sell. Like the IRS is knocking on my door.
No, but in that case, you'd put up your Bitcoin as collateral for a dollar loan, and I totally understand that. But what if you just want to borrow a shitload of Bitcoin? What are you going to do, right? You're going to borrow Bitcoin to put into your deep storage account. So I guess. When you're talking about oh no, what's the market going to do when they don't have all these lenders in place? Well, my guess is they're not going to get levered to the tits and make a bunch of leverage trading plays on Bitcoin and Ethereum. So I'm not so sure. Listen, I think at some point we actually do need a lending facility because there are valid reasons to need to have Bitcoin to go short and that sort of stuff, but. I think that it was primarily being used not for those valid reasons. It was primarily being used so that you could, lever up and go, 3 arrows on that shit.
3 arrows. That's the objective. Good 3 arrows.
Yeah. New word created here on the DQcast.
There you go.
Going 3 arrows. So funny. Yeah, I don't know, like other news. I saw Australia launching their own digital currency, join the ranks of others like China and the U.S. I know we did a pilot program here also in the U.S. I didn't have a chance to read up on it yet. I know it's kind of recent news. It's super early. Do you know any technicals, if there's any differences or like what they're? Yeah, I know they're launching on the Ethereum network, which might be different, right, than the others.
I mean, that's kind of the key to it. So, like the pilots that we've done first in the US, for instance, at the end of last year, I think it actually started with I think Project Hamilton. There's a nice white paper on what that is trying to achieve, and their main goal is like fast, loads of transactions, and they're trying to solve the settlement problem. So how do you make sure you can settle transactions really efficiently and quickly to minimize like counterparty risk, settlement risk, etc. It's obviously a little bit different to what crypto looks like today on Ethereum, which is lower transactions per second and is somewhat slow to settle, but you'll still do it in a few minutes, right? So they came up with Project Hamilton. That was like the Boston Fed and MIT. And then later last year, towards the end of last year, they did a pilot with a bunch of banks in New York Fed. So that was a digital US dollar. I don't think they're going to release it anytime soon, but the pilot program seemed to go pretty well, at least from what I heard. And the difference between that and what the Aussie Bank, National Australian Bank has done is they were like, okay, we're not going to build our own thing. So that's what Project Hamilton was, building their own piece of code, OpenCB it's called. You can probably find it on GitHub. Whereas the National Australian Bank were like, we're going to issue a pegged stablecoin that's governed by us. We'll maintain the peg and issue into that so that you can, trade it one-to-one like the National Australian, the Aussie dollar. And so what was interesting is they put that on Ethereum and the Algorand blockchain. So that's kind of cool. Like I haven't heard any other central bank doing that. It's at least nice in one sense that they don't have to manage that stuff. I personally think there are some issues with it. Like one of the reasons why the Fed didn't want to go that way, well, they will then run it as a centralized institution, but also unless you can solve the sharding problem, or the fact that you have to transfer the blockchain everywhere you want to run the node, it's very big, it's only going to get bigger and bigger, unless you can actually shard it and solve that problem to make it more manageable. I think that's one reason why they wanted to just do their own and kind of build it from a technological principles first, an approach which was intended to be centralized. But I do think it's very cool that piece that the Aussie Bank have got is now they can effectively have that trading anywhere, no payment rails or anything. They can run on any system anywhere in the world for settlement.
The way that I look at this would be like if back in 1980s or early 1990s, you were a company and you wanted to start a website. The MIT central bank project would be the equivalent of saying, cool, there's this thing called the internet. We're first going to build our own version of the internet, and then we're going to build a website on that. Versus the National Australia Bank was like, great, let's just fucking use the internet. TCP/IP is a fantastic protocol. Let's just do that, and we'll build a website on top of it. Problem solved. And admittedly, maybe the underlying rails aren't perfect for a fully decentralized, central bank digital currency that, runs at lightning fast speeds. But generally speaking, I think in the long run, all of these tokens, all of these sort of central bank digital currencies are likely just going to be owned and operated by banks or a consortium of banks. And they're going to be built on public protocols because that's just the way that makes the most sense, right? The government is terrible at building technology. Do you remember back when Obama had passed the like the healthcare reform? Yeah. And they built that website that
crashed.
that crashed, and they found that it had something along the lines of like 500 million lines of code, and they had to hire Booz Allen Hamilton to come in and fix it. And they're like, why the fuck do you have a website that has 500 million lines of code? Like, just massive overkill. It cost them way too much money to build. And it looked like someone basically put together, like a Squarespace website for them. So it's like, I understand that maybe they're like, oh, well, there are these problems with this and we want to build it ourselves. It's like, what makes you believe that you're going to build it better than, a community of thousands of open source developers who are currently working on this project? So I actually really like the approach that NAB is making. I think from a government perspective, the smartest and easiest way to handle central bank digital currencies is to basically let banks handle the peg, right? So all you really need to do is have smart legislation that says these are the laws around offering a digital currency. You must abide by certain collateralization. It needs to be in an FDIC insured, banking facility. You need to have audits, and it needs to pass all these series of tests that the regulators say is the right thing to do. And then you let banks and technology and the free market figure it out, rather than the central bank or the government saying, oh, cool, know what we're going to do? We are going to build the technology ourselves, we're going to implement the technology ourselves, and then we're potentially going to govern it.
Yeah, and I think the nice thing about this is there were several banks in Australia that tried to build their own stable coins, and now the central bank's doing it for them. It kind of takes that burden off, and there's no longer different protocols and stuff. So I don't know, it's a pretty innovative leap forward.
Well, let's be clear, National Australia Bank is not the central bank of Australia. It's a commercial bank. It's like Bank of America.
Sure.
So it's like the second largest bank behind Commonwealth Bank in Australia.
How does the Australian? I was reading an article about this briefly before the show, and they labeled it as a stable coin, right? So what would be like? So it would just the U.S. would be more interested in building out their own because maybe they could put a little bit more bells and whistles and more customization into the technology. I guess I just don't really follow why. How
technically we already have our own. It's called USDC.
Yeah, exactly. That's my point. It's like how does it compare? Like how would it compare? We already do have a stable coin, basically.
Yeah, and so National Australia Bank is effectively building, Circle's USDC, right? They're just doing it for Aussie dollar, and I actually think that this is, if you're a bank, it's a no-brainer to start a stable coin, right? Because if you think about, one of banks' primary sources of funding is stable customer deposits. So, if you think of USDC, Circle makes billions of dollars a year purely off of the fact that they owe no interest on USDC deposits, right? It's just people put it in, and for every USDC in circulation, they know there's $1 at one of their partner banks in a insured account, and they can take that and put it into a money market account, or they can roll T-bills themselves and make 5%. So I think at last check, there was something along the lines of 46 billion in AUM on Circle, and Tether's 66 billion. At 5% a year, they're raking in a multi-billion-dollar profit simply just by rolling T-bills. It's a fantastic business, and I'd imagine that that's a reasonably stable source of funding, right? You're going to have redemptions in and out, but just if I'm Bank of America or JP Morgan and I have a bunch of people leaving stuff in a checking account, right? You better believe that Bank of America and JP Morgan actually has teams of quants that are modeling out, what portion of people's checking account or deposit accounts are stable, because I think most people have kind of a baseline amount of money that they need to keep in their account mentally to feel secure and comfortable, and what they found over time is that those are reasonably stable, and you can model them, and you can build a very nice funding base as a bank off of those deposits. So imagine if you have the same thing but with a stable coin. It's a fantastic business.
Yeah, I'm so curious to see how that rolls out in the pilot program. I think that what the U.S. was doing this pilot program just recently, right? And they have some couple of banks.
End of last year, and then like China has their own that they've been running for a while now. That's live. In fact, I was reading this week they issued a smart contract on this food app. It's called Meituan, I think it's called. It's like
Dim Sum or Die.
Yeah. It's like one of the China's largest food delivery lifestyle or something like that. And as part of it, if you make an order and it contains certain keywords, then on the smart contract you then be eligible for a prize if you get certain keywords of like some pot that they'd allocated, and that would be automatically debited via a smart contract to your account if you placed an order. So it's pretty fun.
Did you ever hear the story about how Alipay became like the largest payment program in China?
No.
It's actually pretty fascinating. They every year for Chinese New Year they have a cultural aspect of giving away gifts, and you gotta love the Chinese for efficiency. Rather than trying to figure out what people like, they just give cash in red envelopes.
Very good.
Hongbao.
I like it.
And Matt likes that idea.
It's fantastic. I mean, my wife is half Chinese. When we go for Chinese New Year, our son gets a little red envelope. It's fantastic. It takes a lot of the hassle out of gift giving. But either way, Alipay became super popular by capitalizing off that. So we've got Chinese New Year happening, this weekend, and it would be interesting to see how you could basically roll that out by the same strategy Alipay, which was like, hey, if you sign up for Alipay, we'll send 10 of your friends, a hongbao on your account. And so everyone signed up for it to kind of get that free benefit. And it caused this massive network effect because they were giving away money to each other, and people had to sign up for Alipay to get their free money. And so if you think about like how much they would have spent to advertise in general, right? Like the cost of acquiring a customer could be hundreds of dollars. So you just give away 10 yuan here and there. And that's
not even.
Next thing you know, you've got 1 billion users.
Yeah, like I send each of you $10. You sign up, and then you send me back the $10. It's like it's amazing.
Like free money, dude.
Yeah,
But I think this actually kind of goes back to maybe another question that I have, which is I think in places like China, where the vast majority of people are unbanked, you can kind of have this interesting mass adoption of digital currencies or digital wallets, but like. What's the use case? What problem gets solved in developed Western countries that already have a pretty well-defined, banking culture with like central bank currencies, or with this, I guess, like digital currencies? Like, at what point in time am I going to use USDC to pay Matt for drinks when I could just as easily Venmo him and it's reasonably quick?
Yeah. I mean, the actual that payment network maybe is a little bit. That's just like consumer adoption. To me, like the network effect more comes from the consumer or the retail market, right? Like, we talk about like getting instead of while Amazon is amazing, and maybe that's the wrong example to give. Let me give another one. Let's say like Dick's Sporting Goods. Like if I get a $10 gift card for Dick's Sporting Goods, and I'm not a sporting nut, that really does that value is a lot less of interest to me than getting $10 hard cash. So like if you're trying to leverage networks and you're providing credits to a store, that's appealing to you, but only to a certain limited amount, right? So I don't know. Like if I were to see that grow, I think it would a lot grow through these referral programs, being able to provide USDC, which would be a lot
actual
harder
cash.
for those people to, actual cash. Exactly.
Because I'll just call a spade, right? What's the current use case for USDC and USDT right now? Well, it's actually pretty simple. If you are a U.S. citizen and you want to trade on an offshore exchange, you go to a U.S. regulated exchange, you convert USD into USDT, and then you send that USDT over to a Binance account that you access through a VPN, and then you use your USDT to trade wherever the fuck you want on Binance. So, like, that's a use case. It's a valid use case. I think it's,
yeah.
I mean, not for me, but people could do it.
It's limited.
Yeah. But like, when are you going to whip out, your wallet and pay for McDonald's, or when are you going to, whip out your, wallet, your, cell phone and, tap to pay to, I don't know, do a peer-to-peer payment using USDC. So, to me, that's still something that's like yet to be determined, is like what value that gives in a developed country. It could, I mean, if you tell me like it speeds up the existing rails and it replaces a lot of the technology, cool, I guess, right? One could also make the argument that it's actually probably more beneficial for governments, because now it gets rid of the cash economy, right? Like you can pretty much track anything. So from like a tax perspective and from a statistics and tracking perspective, you really know where everything is going because it exists in a blockchain, and that's kind of nice. But from just like making the argument of why would a consumer switch their money into a digital currency and use that to make payments, it's just not super clear to me at the moment.
No, but like, yeah, I don't like the only, like I was touched on before, the only use case that I could see is that it's a lot easier for a corporation to incentivize or pay for the acquisition of more users, to pay them cash to go in, and the easiest way for them to do that would be through US, like something that would look something like a stable coin, because it's hard for them to, because you have to have banking information to actually wire them cash. Like it's more like the inflow. I mean, that's like how the network grows. But again, that's like it's still like a limited, and it's not really being done yet either. Yeah.
Well, how about this? Here's a good use case. We'll put our USDC wallet info in the show notes, and if you guys want to send us, beer money, then, that's great.
Patriot water all around.
Yeah, Patriot water all around. I mean, I'm joking. We don't need your USDC. If you haven't noticed, Matt only drinks the finest Polish beers. So
we wouldn't get enough donations. I don't think. But that's actually a good point, though.
No economic hardship.
Just payments internationally actually become a lot simpler. So as long as whoever I'm paying is happy to accept USDC, I could just send that straight away. I don't have to go through intermediaries. It's just done. So, and that's kind of the beauty, in a sense, of what format that is. I think with it being a central bank, and you can see this right now with China, is like, I can't get a wallet to transact on their infrastructure right now. So me as an outsider doesn't have access to it. So I can't send people money willy-nilly. So that's kind of why having like a decentralized layer, I think, is quite nice, because you can literally do global payments.
But so there's one other thing to say to that, which is, let's say you're, for example, a Chinese national, and you get your hands on some USDC, and suddenly you can transfer USDC or USDT anywhere you want to go, and you can subvert capital controls. Now, I actually don't have a problem with that personally. I guess philosophically, it's technically against the rules, but stable coins that are easy to transact internationally. I think that like the difficulty of transacting internationally right now is less to do with that it's difficult to move money around, and more to do with there are lots of hurdles put in place by governments to make sure that it doesn't subvert capital controls.
OFAC or something
it doesn't
else.
subvert like OFAC and all that sort of stuff. So it's still nuanced. And I agree with you. Like if you wanted to move money internationally, like a stable coin seems like, at least technologically and like use case, that's like definitely the way to go.
We'll see how it plays out. I don't think stablecoins are going anywhere, so we'll see how it all.
It's going to be a fun year. Let's see what I think it comes live May officially, the Aussie coin. So we'll see how that transpires.
Maybe later this year, Matt can buy a Schwitz with USDC.
That's the dream.
With your help, good listeners.
Yeah.
On that note, guys,
Yeah, well, thanks, guys. I think we'll leave it on a high note there. Anything else? I think we might be done.
No,
we're good.
No, I think we're good.
Guys, thanks again for joining the Deep Q Cast. Everyone out there, where the drinks are fresh and chill, and the conversation is Sprite and nerdy. Looking forward to seeing everyone next week.
Perfect.
See ya. Bye.